Wow. A pivotal moment that changed my trading career and the whole trajectory. Yeah? Okay, yeah. So a pivotal moment that changed my trading career was really understanding how to think in a probabilistic mindset. Once I learned how to think in probabilities, everything changed for me. So basically what it was I was still potentially within the struggling parts of my trading where I had multiple systems or type of scenarios that I was trying to trade, and really failing to grasp the fact that I didn't need to be right all the time. It was completely acceptable to be wrong most of the time and still be profitable as a trader. And I remember listening to this podcast where they were mentioning a famous bond trader back in the day. I think his name is Richard Dennis, and he had a 25% win rate. And by understanding what he meant by having a 25% win rate, he pretty much lost 75% of the time, but he won 25% of the time. But those 25% that where he actually won, they outweighed his losses tenfold. And Richard Dennis, I think, was one of the traders that was able to convert, I think, 4,000 into eventually a 4 million fund. Don't quote me exactly on the numbers, but once I heard that, I was like, what on earth is going on? Where's my trading going wrong? What am I doing wrong? And what I was doing wrong was trying to be right all the time and not understanding that the markets are generally a place of possibilities and probabilities. So what does that mean? That yes, you can be right, but there's also a very strong chance for you to be wrong. It doesn't mean that your setup is wrong. It doesn't mean that the actual design is wrong. It just means that that time the market did not agree with how the scenario should play out. So once I actually understood that, hey, you know what? When it does go my way, how much am I extracting from the market, which can potentially be 2, 3, 4%? It puts me in a position where I can be wrong 3, 4 times, even 5 times out of 10, and still be a profitable trader in the long run. So once I understood that about probability, it put me in a very strong position to know that, hey, look, just allow the setup to play out. Do not deviate with it. Don't deviate from it, sorry. Don't tamper with the trade. Allow the asymmetrical risk to reward setup that you've built over a large period of time to play out. And in the long run, you're going to be profitable. Wow, very good question, because I don't adjust anything. I've built a system which is very much based on price action, very much based on the 3 things that markets do, which are range, breakout, pullback, and keep trending. Range, breakout, pullback, come back into the range, move to the other side of the range, and range, breakout, pullback, come back into the range, and stay ranging. These are the only 3 ways that markets move. So because my system is very much based on market structure, I feel that I don't have a need to change my variables, nor do I have a need to change my parameters, you could say. Now, if my system was a lot more indicator based, then, you know, I can understand how you may need to make a few changes, as some indicators may not work as well as others, or some indicators work better in other environments than others. But because everything for me is based on market structure, I feel that I do not have the need to change how I trade. Now, once again, my setup doesn't turn up every day. My setup sometimes doesn't even turn up for a couple of weeks. But from the data that I've gathered, I know that my setup turns up at least once, at best twice a week, with an asymmetrical risk to reward varying between 4% to sometimes up to 8%. So how do I remain consistent, which is a very important question, is by literally mastering my mindset, mastering me sitting in my hands, mastering me reviewing my setups, and knowing that eventually in the long run it will turn up, and being in a position where I've really quietened down the mind in regards to, seeing other traders having systems which are a little bit more frequent in the market, and then being in a position of extrapolating money on a daily basis, whilst for me, I'm gonna have to wait maybe 2 to 3 days, sometimes maybe a week or so. But because I've studied this setup so intimately, I've almost built the mindset that doing anything else is absolutely wrong, which puts me in a position of total control of my own self and enables me to execute with size when my setup does turn up, without any hesitation or any feel or sense of being wrong. I'm completely impartial to the market now, which I believe is a superpower, frankly, that I've attained over a large period of time. And once again, I love the fact that my system doesn't need changing because it's based on price action. A common misconception is that they believe that they can adopt multiple systems all at the same time. The reason for so is because they believe that they got the knowledge, but they don't understand how learning actually works. First of all, there are 4 stages to learning: unconscious incompetence, then conscious incompetence, then conscious competence, then unconscious competence. First of all. Second of all, just imagine adopting 3 or 4 strategies all at the beginning of your trading career. What they're failing to understand that all these strategies have their own nuances. Therefore, what I tend to tell them is that you need to imagine each and every single strategy as a completely different profession. So let's say we have 4, for example. One strategy, you're pretty much a mechanic. Another strategy, you're pretty much a plumber. Another strategy, you're a painter. And another strategy, you're a carpenter. You cannot become qualified in all of these professions if you start them all at the same time. Why? Because you're dividing your time, first of all, and you're not going to achieve a level of mastery quick enough because you're trying to push all these strategies. So what we do, and what I tell all my students all the time, is to approach this like an actual business, which it is a business, first of all, but actually approach it like a business. What does that mean? Putting all your chips or all your eggs into one basket, into one strategy. Why? Because you're going to speed up the process of your actual education and your psychological education, of course, which puts you in a place where you're going to learn all the nuances of the strategy, and you're going to learn all the nuances of trading that strategy proficiently. Because before you get to a place where you're proficiently doing something and you're competent, you're a novice. And if you're a novice in all four strategies, and you're also a novice in how to think about trading, you're going to find yourself in a loophole that you can't get out of. So you're going to find yourself in a loop that you can't get out of, which makes it extremely hard and extremely frustrating for beginner and intermediate traders, because you get traders that have systems but don't know how to follow the system, or don't behave towards the system, or try to find other systems whilst the other system is actually not setting up for the moment, which makes them struggle a lot and never achieve that level of consistency. At the end of the day, what is consistency? Consistency is doing the same thing every day, irrespective of the outcome. So a consistent trader, a proficient trader, will do the same thing every day. If their setup is not there, they're not entertaining the market. Wow, very good question. I would say the best piece of advice that I've heard through my trading journey is probably size the best and scalp the rest. Now, I am not a scalper. So I'm not gonna go and tell people to start scalping. But what I will take is the first section, which is size the best. What does that mean? Sizing the best is, in theory, is a reflection of your mindset as a trader. Putting size behind trades doesn't come overnight. And putting size behind trades means that you have a certain level of confidence, not in the market, but in oneself, to be in a position to, make large amounts back, which puts you in a position where you really understand your setups, and you're very much aware of what you are doing. This doesn't come overnight. This is something that is developed over a large period of time. I will be lying if this will come to you in a year's time. But maybe in a year and a half to 2 years to 3 years in, you're going to be in a position where you very much know the variables that enable you to become a trader in these markets, therefore having an edge. And once you have that edge, you need to prove that to yourself by putting size behind these trades. Now, I'm not going to say that you got to put size that blows up your account. No, everything needs to be in proportion to the size of your account. But you want to be in a place where you're executing with confidence. And the reflection of confidence is putting money behind these trades, which is size. So once again, size the best and scalp the rest. I'm not a scalper, so I'm going to size the best setups and size the setups that I really understand, that I've studied over a large period of time, and I have full confidence in what I'm doing. If you guys like this content and you want to hear a lot more, please come over to Financial Markets Online, and you're going to find us on YouTube, Instagram, and TikTok.